There's a playbook that Wall Street has used over and over and over again for over 100 years. Trash an asset publicly, accumulate it privately, then open the doors to retail right before the crash. They just did that with Bitcoin, and I can prove it. Today, I'm going to walk you through the exact timeline, name by name, date by date, of how Jamie Dimon, JPMorgan, and Vanguard told you that Bitcoin was a scam, then sold it at the top, and what they're doing right now while the price is crashing. And by the end of the stream, you're going to understand why this crash is happening, who's behind it, and the one thing they don't want you to know that they're going to do next. But first, let's get in and start with the timeline here, because the man himself, Jamie Dimon, CEO of JPMorgan Chase, the largest bank in America. Here's what he said about Bitcoin over the years. 2017, Bitcoin is a fraud. It's worse than tulip bulbs. I'd fire any trader in this trade at any second. Then, not too long in the distant future, 2018, I regret calling it a fraud, but I still don't care about Bitcoin. And then in 2021, he called it, quote, worthless. Then in 2023, he said that if I was the government, I would, quote, close it down. And then in January 2025, he called it a Ponzi scheme. For 8 years, the CEO of the world's largest bank told you on national television, at shareholder meetings too, and in congressional testimony, that Bitcoin was garbage, a fraud, a Ponzi, something that the government should shut down. I mean, this guy is honestly comical. Now, watch what his bank was doing behind the scenes for those same 8 years. In 2020 to 2021, JP Morgan and Jamie Dimon, I guess, behind the scenes, they were quietly building a blockchain division called Onyx. He hired hundreds of crypto engineers. Then in January 2024, after the spot Bitcoin ETFs launched, JP Morgan became an authorized participant, meaning that they were literally facilitating the creation and redemption of Bitcoin ETF shares while their own CEO is calling it worthless publicly. Then in May, JP Morgan officially allowed all clients to buy Bitcoin. And that was the big thing here. They're going to let their clients buy Bitcoin. Oh, thank God, Jamie Dimon. You're finally allowing me to use my money how I would like and buy Bitcoin, right? Because they probably saw hundreds and thousands of clients leaving their clientele because they just weren't allowing people to buy Bitcoin at one point in time. So, November 2025, this is where it gets a little hairy, folk, because this is where we start to see Jamie Dimon and others really start to, I guess, like give a lot of hopium to the market, right? Because we have, in a span of literally 1 year, them going from a Ponzi scheme to literally giving the craziest price targets that we've seen. Jamie Dimon, in a matter of just a month, and JP Morgan, they said the fair value was $170,000. This is November 6, 2025. Bitcoin was at 96-ish thousand during that time. And then they gave another call where they said Bitcoin could climb to $240,000, right? So this is not, YouTube hopium or anything like that. This is Jamie Dimon, who's been calling Bitcoin a Ponzi scheme for a long period of time. And they weren't the only ones here. Now let's get into Vanguard here, because Vanguard has just as interesting, if not more of an interesting timeline here, because the second largest asset manager on the planet, $11 trillion in assets, your parents' retirement fund, your 401k, and probably your money. Vanguard's stance on Bitcoin was clear. When the Bitcoin spot ETF launched in January, And every other broker, literally Fidelity, Schwab, BlackRock, you name it, they listed it immediately. Vanguard said no. They blocked their clients from buying their Bitcoin ETFs. And the CEO at the time said crypto didn't align with their investment philosophy. And for almost 2 years, Vanguard clients couldn't buy a single share of Bitcoin ETF through their platforms. 2 years. Literally, Bitcoin went from 40K to 100K during that 2-year period of time. And Vanguard would not allow their clients to buy. Interesting. Why would they not do that? And then on December 1st, 2025, this is where Vanguard makes the major shift, right? Their move, they're going to give their firm access 50 million clients. They're going to let them now invest in the Bitcoin ETFs. Oh, thank God, Vanguard. You guys here are now letting me use my money how I would like. Thank you, Vanguard, right? Just at the perfect time, December 1st. What was the price? Do you guys remember when that happened, right? Everybody saw it at 93,000 during that time. And everyone's like, oh, we're going to see some major macro headwinds now, right? The 50 million users, the 50 million people that have their money with Vanguard, now we can all invest with Bitcoin, invest in the Bitcoin ETFs. That should send trillions of dollars to this Bitcoin thing, right? This fixed supply asset that everybody here knows and loves, right? Now, what has happened since then, right? Because Bitcoin's price during that time, 95K, and now we've got it 30 grand less at 65K. Makes you think. A 32% crash in less than 3 months. And every single Vanguard client who bought Bitcoin that day, they were finally allowed, is now underwater. And they held the door shut when Bitcoin went from 40K to 95K to even to 120,000. So what have we seen since this time? Because as you guys know, we're seeing these institutional investors. Sure, Bitcoin is now shooting up on this Jane, Austen news or whatever it is. We'll get into that in a second. But we're seeing the ETFs bleed out outflows in 2026. And we're seeing the longest streak of Bitcoin ETF outflows. So since Vanguard opened that access in December, early December, we've seen 5 consecutive weeks of outflows, which is the longest streak since the ETFs launched. $4.5 billion has been pulled out of these Bitcoin spot ETFs in just 2026 alone. 3.8 billion of that was just in the last 5 weeks. Now, last week, we saw 316 million in outflows. But here's the twist. While retail investors, the people who bought through Vanguard and JPMorgan at the top, are panic selling, hedge funds have actually flipped the script. So even though we see this, right, and we see these outflows, we've seen the hedge funds now switch to net long. So read that again. Retail is now selling at a loss, and institutions are buying what retail is selling. The same pattern, literally every single time. This is how the wealth transfer works, folks. And this is what they tell you not to do because they tell you to do because they told you not to buy at 40K. They let you buy at that 95K mark, and then they crash it to 65K, and then they buy what you're selling. So this isn't new. This is literally their 100-year-old playbook. And if you don't believe me, we can dive in to what JPMorgan and Jamie Dimon have done in the silver markets, because this is nothing new. Right? Silver, JPMorgan paid $920 million in fines for manipulating the silver market for over 8 years. They crashed the price through fake orders, then hoarded $750 million of ounces of silver. They went from the biggest short seller to now the biggest long player. And if you actually look at this overall market dynamic, Jamie Dimon and JPMorgan, they are the largest physical asset holder of silver in the market. And there's been a shortage of physical silver over in Japan and in China and in these other markets. So it leads the question, is Jamie Dimon and JPMorgan actually short squeezing the silver markets? And I mean, you guys have seen it. If not, you might be living under a rock, but the silver price chart, I mean, we've seen literally the biggest intraday drop where we've literally seen a $40,000 crash. I mean, look at this meme that this guy has. And that's of silver. It's not of a meme coin. It's of a $4 trillion plus dollar asset. And we've seen silver drop 40% in a single day. It was historic, right? The price crash. It went from $121 to literally under $75 in a single day. Silver had leverage-driven volatility. And obviously, this can still happen in the Bitcoin space with a lot of leverage. But I think it's interesting, we're going to dive into more of the silver and the manipulation that Jamie Dimon and these big banks have done before. So be sure to stick around. But this price target, comes in November, right? They increased that price target in December to 240,000. A lot of this had to do with the macro headwinds that they saw from Vanguard and their other banking buddies. All of these guys, they're on the phone 24/7 talking to their other CEO friends. I mean, Jamie Dimon and Larry Fink are buddy at this point. So these two guys are now looking at the overall Bitcoin space, seeing the inflows. And of course, Larry Fink, they have to facilitate a lot of these Bitcoin buys for the big players. Larry Fink and BlackRock own majority of Coinbase. And so what does Coinbase do? They custody a lot of these other Bitcoin ETFs. They could see all these inflows and outflows before because, hey, let's face it, they could just call up Coinbase and say, hey, what are you guys seeing, right? Brian Armstrong is essentially buddy with Larry Fink and Jamie Dimon. And Vanguard has essentially been the biggest player that has not allowed their clientele to buy Bitcoin at any point in time. So now all of a sudden they allow their clientele to buy Bitcoin, and you got to ask yourself, okay, what the hell is going on here? So we see this, and then you see the manipulation that we've seen in the past from the silver market. And then you're like, okay, well, what else has happened in the past? We've seen, other things from 2008 that we'll get into here in a minute and how these markets are even more manipulated. But one thing that you guys can do in a situation like this is avoid selling. The worst possible position that you could be in is a forced seller, folks. So in order to avoid that, you can get out of the banking system and go to somebody like Salt Lending. They've got an exclusive offer for you guys listening right here, right now, Green Candle listeners. All you got to do is go to the link, saltlending.com/green-candle. They've got some of the best rates in the industry, starting at 9.95%. You could get 50 basis point off if you use the promo code GC SALT-01, I believe. And if you could get the term durations 1, 3, 5 years, 70% LTV. The best part is when Bitcoin crashes, goes up and down, you see this crazy volatility. They've got the Salt Shield so you don't have to worry about getting liquidated. So be sure to go visit my friends over at saltlending.com. Unlock some of that liquidity, folks, because that's the best thing that you can do when Bitcoin is floating right here at this, because you've seen the ETF outflows go like crazy, right? But you've seen these markets be manipulated more than ever before. Now, what else have we seen being manipulated? It's not just this, right? It's the mortgage-backed securities from 2008 that essentially, created that bubble, right? This is literally like Wikipedia is citing this as like the number one reason. But what happened during this time, right? It was essentially housing, and the housing market became financialized, right? Something like a roof over your head should not be financialized. It should, like many believe, it should be like a human God-given right. But look, for better or for worse, whatever that argument is, I don't really care about the political side of it. But the reality is that this got financialized. The housing market got financialized, which caused it to crash. They put a bunch of different leverage on it, and they essentially manipulated a market that was, quote, a human need. And look, that's, like I said, not me saying all of this stuff. This is literally on this Wikipedia page. What happened, right? It was a lot of excess speculation on property valuations by both homeowners and financial institutions. It's led to the 2000s housing bubble. This was exacerbated by predatory lending from some prime mortgages, right? So Jamie Dimon and the world's largest bank was behind this at one point in time before as well. And let's just face it, if they can manipulate a real estate market that is significantly bigger than the Bitcoin market, you know what? They estimate it to be like $50 trillion or so, maybe even bigger, maybe 200 trillion. Maybe I don't know. Maybe I'm just pulling those numbers out. But the real estate market is significantly bigger than the Bitcoin market, the $2 trillion market. It's less than that now, 1.5, I think, at the current market cap. It got up to a 2 trillion market cap. All right, whatever. Semantics, folks. Either way, the silver market at $4 trillion is getting manipulated. The craziest part about the silver market getting manipulated is if you really take a dive into how much paper silver versus physical silver. And this is the crazy part. There's literally 300 to 350 paper ounces of silver to every 1 ounce of physical silver. And the more paper that gets into these markets, the more it can be manipulated. The reality is that these ETF markets, these are paper Bitcoin markets, right? I mean, we had the meme going around paper Bitcoin summer. And, you know, Coinbase has been rumored to be issuing paper Bitcoin, right? So Coinbase, on this potential rumor that they are issuing paper Bitcoin, well, Coinbase custodies majority of the Bitcoin ETFs. So it could add stock and ETF trading as it expands beyond crypto. Oh, thanks, Coinbase. But it has majority of these ETFs, right? So let's see, how much Bitcoin does Coinbase currently custody as of early 2026, holding 14 to 14.5 thousand Bitcoin, but it custodies 2.27 million Bitcoin. And this is as of September 2024. I mean, this is insane, right? As of September 2024, it had this much Bitcoin under its watch. This was before the Bitcoin ETFs were launched as well, or just right as a start. Excuse me, they were launched in January 24. So imagine, of course, we've seen outflows like I've shown you guys throughout this live stream, but imagine what actually happens, you know, when people realize about Bitcoin, you know, the true aspect of it, right? Holding it in self-custody. The Bitcoin on exchanges has been continually shrinking, but as of late, it actually went up just oh so little, right? Because we saw this major sell-off kind of happening here. The whales were dumping them back on exchanges, and Bitcoin is now having a 2.5 million on various exchanges, right? On the known exchange balances. So if this is the case and we see more Bitcoin coming on exchanges and Coinbase custodying it, it's essentially you guys, the plebs out here, taking your Bitcoin from self-custody and putting it back on exchanges so, you know, Coinbase can sell it off. Because, I mean, that's the reality of all of this. And if you take a step back and you keep looking at, you know, the amount of Bitcoin that's going on exchanges, or the amount of Bitcoin held on these publicly held companies, right? In the last 30 days, you know, it's 0.02 selling, but majority of these institutions are holding, and it's up and to the right. I mean, look at these guys, right? So if this is up and to the right, this is where we're going to start to see, Bitcoin flow to. It's not going to be the retail traders. Retail has been selling off during this time. So you got to ask yourself, why is retail selling and these hedge funds are honestly going net long, right? So, it's essentially like watch what they do, or watch what they do, not what they say, right? As these ETF and these hedge funds start to go long, why are you selling off? Why are you, the pleb, selling off? Why are we seeing the number of Bitcoin wallets with 10 million sats decrease? Why are we seeing all of these different things? Right? I mean, at the end of the day, Michael Saylor, how these billionaires look at this. I mean, he's out here describing Bitcoin as the iPhone moment. Like there's this 50K surge, or 50X surge, excuse me, coming in, which is a lot more than 50K. Well, actually, no, it's 30K. Excuse me. Quick maths here. I messed up. But hey, at the end of the day, these guys crashed the Bitcoin market, right? They told you, do not buy Bitcoin. It's for thieves. And then they dump on you. And the only place Bitcoin is safe, the reality is in self-custody. I've partnered up with my friends over at Trezor, where I think it's like one of the easiest places to put your Bitcoin in self-custody. Take some of that 2.5 million Bitcoin off of an exchange and put it into self-custody. The best and easiest place is with the Trezor Safe 7. I highly recommend it. You guys need to go to the link in the show notes. Click that affiliate link, and I'll take you here. And they've got a great Bluetooth feature. I use it all the time because I'm traveling. I'm coming to you guys live from Tampa, Florida. If you guys are here in Tampa, come to the Sound Money Soiree that we got going on here on Saturday, because we can talk all about this stuff in person. I would love to see you guys, and we can break down how Jamie Dimon is still essentially looking at this. Because let's look, right? They've got IPO pump and dumps. For decades, Wall Street banks take companies public. Like, I mean, this is essentially, them, right? They hype it up to retail investors. Then they all sell their own retail, or they sell their positions when they pump and dump. Like, they literally time. But here's what they don't want you guys to do, right? Every time this playbook has run, every single time, the assets don't go to zero. It goes through a cycle, right? People who hold through this manipulation come out ahead. So silver crashed from $49 to $14. Today it's $70, or today it's $78, right? Housing crashed 30 to 40%. Today, home prices are at all-time high. Bitcoin has crashed 80% 3 separate times in its history. After every single crash, it comes back to make new all-time highs. The liquidity data, look, I just listened to this great podcast with Michael Howe, the top liquidity expert, shows that global liquidity has peaked and it's trending down. And this is why risk assets, including Bitcoin, are under pressure right now. But the liquidity cycle has a trough. And probably some 2027, after every trough, there's a massive expansion. The people who panic sold in December 2018 at $3,000 missed the run up to 69K. The people who panic sold in 2022 at 16K missed the run up to 120K. The question isn't whether the crash is real. The question is whether you're going to do what Wall Street wants you to do, which essentially be their liquidity, or whether or not you're going to actually keep accumulating. JPMorgan has this $240,000 price target, right? And this isn't, the Bitcoin hopium, right? Vanguard is now in Bitcoin. They're not going to let this thing fail by any means, right? Because at the end of the day, Bitcoin doesn't care what JB Dimon and JPMorgan think. It's 21 million. That's it. No CEO can change that. No bank can print more. No government can seize it from your own wallet. At the end of the day, this is why they're scared. This is why they're going to start to play games and they're going to start to try to manipulate Bitcoin more than we've ever seen it before, because Bitcoin is the one asset where the playbook eventually fails. So if this helped you guys open up your eyes, be sure you're hitting that subscribe button, hitting that like button. Shout out to everybody. Shout out to McLovin, All Nighter Hider, all you guys that always come around. I appreciate you guys, all the candies in the chat. Be sure to get the bell notification so I can see you guys all there, and I'll catch you guys all at the next one.